On this week's Emily Now episode, we'll be talking about how this is not your parents' mortgage market. We'll talk about the Purchase Plus Improvements mortgage, green refunds, and we'll share with you a little bit about what's happening with mortgage renewals and how you might benefit. So stay tuned, it'll be a good episode. My name is Dylan Gallagher, founder of emilynow.ca. We're an online platform making it easier for individuals and businesses to access the financing that they need, in particular the mortgage or loan that they need. Every week we put together an Emily episode to try and help you understand a little bit more about the things that you should know about borrowing money. We're of the opinion that if we can educate you and give you the information that you need, that you'll be in a position to make better decisions about your finances, which should help you save for the future, invest in new things to grow your wealth, or who knows, maybe give some of your wealth back to the community. So you can find us on Twitter at Emily Now Canada. You can like us on Facebook. You can subscribe to us here on YouTube. And we're still in the Google Plus world as well, so you can add us to one of your circles there. We'd be happy to interact with you, answer your questions. And as we do with every episode, we answer a few questions. We'll give you what we call a real-life example of what we're talking about so that you have some way to apply what you're seeing here. And then we're going to chat a little bit about what's happening in the market. So let's get started with our first question today, which is, could I benefit from the Purchase Plus Improvement mortgage? This is an interesting mortgage product. We've used it for more than a decade. The product is designed to allow a bank to give you money to renovate a property that you're purchasing. So let's say you're buying an older home, the older home needs a new roof, or maybe it needs a new furnace or a hot water tank, or all of the above. Normally you would have to just buy the house and pay for that yourself, but banks have been working over the years to make sure that they can be a part of that. And so the Purchase Plus Improvements mortgage says you can purchase the home and then plus the improvements to the mortgage as you go. That's probably not great grammar, but that's kind of the gist of it. And so let's say you're buying a home for $400,000. Typically you can get up to 10% of that $400,000 advanced to you for renovations. You end up getting quotes for the work that needs to be done. You pay for it first, but then the bank will, when you close on the property, they'll advance a little bit of extra money to the lawyer. It'll stay with the lawyer. Once you've done the renovation work that you think you needed to do to the property, you send an inspector out. The inspector says, yep, I can see that the work was done. That goes off to the lawyer, and then the lawyer is able to give you a check back and reimburse you for the money. So that can be a little tricky because some people might be interested in the Purchase Plus Improvements mortgage, but they may not know that they have to have the cash available to pay for those improvements before the bank releases the funds. Now, some people who understand the program and who are maybe shrewd negotiators will talk to a contractor and say, look, contractor, I'm buying this house. I need to do some work on it. You're the guy to do it, but the bank's not going to give me the money until the work is done. So maybe I could give you a deposit on the work. Are you okay to carry your balance until such time as the bank releases the funds to me? And if you have that conversation, you might find some contractors are okay with that. Not all of them will be, but better to know that ahead of booking them in and understanding how you're going to pay for their services instead of getting them there and then realizing that you've got to cut them a check and you don't have it. So it's a good option to consider for people who maybe who want a relatively new home, but maybe don't want to buy it in a new community. They want to buy in an established community, but the homes in established communities can tend to be a little bit worn out or tired, and there's certain things that need to be done that could really bring it up, flooring, a bathroom, a kitchen, etc. And so the Purchase Plus Improvements mortgage really works well for those sort of situations. But make sure you understand how the cash flow works, how those improvements are ultimately going to be paid for, and have a conversation with your contractor before you decide to go with one of these mortgages so that you understand the implication to your personal finances. So if you think you need a Purchase Plus Improvements mortgage, of course, jump on emilynow.ca. We'd be more than happy to help you with that. Our customer service team is standing by, ready to help. And so we'll move on to the second question today, which is, Do I qualify for a green refund of my mortgage insurance premium? So this is, I would probably guesstimate there's a very small percentage of homeowners out there that have considered the energy efficiency of their home or their green home. Certainly first-time home buyers tend to be more excited about just getting into a home. People who are maybe moving out of a starter home and into their first move-up home may not be as concerned with it, but I think generally speaking, people are probably aware of energy efficiency and wanting to save a little bit of money, but the way the math kind of works out today, if you go and spend a bunch of money making your home energy efficient, a lot of people don't want to wait for the amount of time that it takes to realize those savings with lower power bills and etc. So, but there are some incentives out there. So I'll mention sort of two key areas where this green credit has an opportunity that maybe works for you. And so the first one is if you're putting less than 20% down on the purchase of a new home, you're going to require CMHC insurance. And it turns out that if you get an energy audit done on the home that you're purchasing, so that would have to be part of your purchase agreement that you negotiate with your real estate agent, but if the rating on your home comes back at 82 or higher, whatever your CMHC premium is, you can save 10%. And so that can be hundreds of dollars, that might be thousands of dollars in some cases. And to put it in perspective, the EnerGuide rating of 82 is kind of where the bar is. Most homes are going to be somewhere between maybe 65 to 72, maybe a little bit higher. And the rating reflects how energy efficient your home is. So there's a bunch of tests that they do, and they've got a checklist that they go through to make sure that your home in fact meets it. And if it turns out to get a score of 82 or better, then you can save 10% on your CMHC premium. So that's one thing to consider. But the second thing to consider is maybe you are putting more than 20% down, and the different banks that are in the marketplace all have, I'll put it in quotes, a green mortgage. And what that really means is that they're either offering cashback rebates to folks that will spend money to make their house green, and that can be hundreds of dollars in some cases, and or they might have special interest rate discounts for homes that are energy efficient. And unfortunately, there's no blanket policy across the marketplace right now, but every bank that you would be familiar with certainly has made a product that fits the green category and is there to promote people buying energy efficient homes. It's probably a trend that will continue to get popular as life goes on, but certainly over the past decade, we don't see a lot of it. We don't see a lot of people talking about it, but on occasion, people mention it, and so we thought it would be important to at least let you know how that works, and in particular, how it relates to your insurance premium. So if you're buying a home, the home score is better than an 82 on the EnerGuide rating, then you might be able to get a discount on your premium. And that's kind of a big deal. So if you want to inquire about a green mortgage, make sure you inquire specifically with the banks that you're talking to if they have a green mortgage. You can also visit emilynow.ca and to see if maybe we can help get you in front of a bank that has a green mortgage that you can benefit from. In today's real-life example, I'll walk you through a client that ended up purchasing a home utilizing the Purchase Plus Improvements mortgage and kind of how all of that shook out and what some of the challenges were, so that if you're considering buying a home that needs some substantial renovations done, or not even substantial, maybe some minor renovations, but you want to make sure that they're covered. Here's an example. We had a client that bought a home, nice neighborhood, but an older established neighborhood. And it turns out that the home that they bought had a furnace system in it that was, I don't know, it was kind of really intense, high energy efficient. It was, even the venting was a little bit different. And what happened is it wasn't negotiated properly in the purchase agreement, but the homeowner who sold the house actually took the furnace with him, if you can believe that. He not only took the furnace, but took the air ducting system as well. And so when it became apparent to this new homeowner that they were going to end up occupying a home that didn't have a furnace, that ended up raising a few issues. One, the bank doesn't want to provide a mortgage on a home that doesn't have a furnace. And then secondly, where does the money come from in order to pay for that furnace? Because all of the funds that this particular borrower had were going to be used for their down payment. So they had to scramble to figure out what they were going to do. And that's where the Purchase Plus Improvements mortgage came in. So the bank was able to approve them for closing on the property so they could purchase it. and at the same time made sure that before the purchase happened that they were able to get an HVAC company in there, or heating and ventilation air conditioning company in there to install a new furnace, put the ducting back in, and the homeowner did have to negotiate with the contractor to delay payment because they didn't have the funds available. But as soon as the work was done, the inspector went out and was able to show the bank, look, furnace is in, you guys are good, and they were able to kind of make it all work. But it was looking a little sketchy there for a bit. The homeowner was obviously very worried. So a couple of things. If you're buying a home that needs some renovations, make sure that you negotiate in your purchase agreement that you can get access to the property for any of the trades that need to go in and take a look and give you quotes. That's really important. You'd be surprised, some homeowners will say, no, I don't want anybody in the house until you own it, and because you didn't negotiate in the contract, I don't have to give you access. So make sure you get access. And then secondly, if it turns out the home does need renovations, make sure you've had a conversation with the trades or the contractor to figure out how payment of their invoice is going to work. Either you're going to pay it and get reimbursed from the bank, or you're going to ask them to wait for payment until the check is released from the bank, and then you'll give it directly to them. So those are a couple things to keep in mind, and there's a real live example of someone that had to use the Purchase Plus Improvements mortgage to make sure there was a furnace in their home when they took possession. If your mortgage is up for renewal, this is probably good news for you, certainly in the next year or so. As interest rates continue to stay low, there's a whole portfolio of mortgages that'll end up coming into the marketplace on a renewal, and because interest rates have been below 3%, certainly for the last year, there's a pretty good chance that if you have to renew your mortgage, you can lock in another very low interest rate for the next 5-year term that you might be choosing. And Gary Marr wrote an article in the National Post that talked a little bit more about this. We'll post the link for you in our Twitter feed and on our Facebook page so that you can take a look at the article yourself. But basically it talked about how low interest rates mean that a large number of homeowners are going to be able to lock in interest rates for the next term that they choose. That because interest rates are so low, that homeowners don't have to send a bunch of their cash to interest. They can start maybe figuring out how to use some of the cash that they have to pay down the principal, pay down their mortgage quickly. And it also highlights that the window might be closing too. There's always rumblings in the marketplace of interest rates going up, and I think we've heard enough of those rumblings over the past decade that people probably don't pay attention to them anymore. But I'll do my part to make sure that I've made you aware that, look, interest rates have been have been unreasonably low for a very long period of time to try and stimulate activity in the economy, and it's reasonable to think that in the coming years we'll see interest rates maybe get back to a more normalized place, which could be 5% or 6%, I don't know, but should be aware of it. And if your mortgage is coming up for renewal, you might want to consider the implication of taking a longer term to lock in the rate instead of keeping a shorter term variable. So probably if your mortgage is coming due within the next year, you can talk to a banker, mortgage specialist, mortgage broker. You can go to emilynow.ca and you can definitely lock in an interest rate for 180 days. I mean, that's a pretty long period of time. So if you think your mortgage is coming up for renewal, lock in the interest rate today, know that you've got it, and if on the day that your mortgage renews interest rates have dropped, you're going to be able to lock in that difference. So it's of no harm or foul to you and no cost to you either to start considering shopping for your mortgage renewal today. For those of you that don't know, mortgage renewals are a profit center for the bank, and the logic sort of goes something like this, that the client's already with us, we already have all their paperwork, we're already registered on title, and you know what, there's a little bit of perceived work involved in a homeowner moving their mortgage to somebody else once they already have it. So I think we could probably get away with charging them a higher rate of interest. And so that's where banks tend to profit. So if you get that renewal notice, make sure that you take just a minute to visit some of the rate websites that are out there that can tell you where interest rates are today. Of course, we would encourage you to jump on emilynow.ca to see what that might look like for yourself. But do a little bit of work to figure out where interest rates are, and then make sure that if you're going to stay with the bank that currently has your mortgage, that you negotiate very, very hard for the very best rate. And we'd like to help you with that, but you've got lots of options in the marketplace to take advantage of. So good luck if you have a mortgage renewal and lock in that interest rate. That's it for this week's Emily Now episode. We hope you found it helpful, and we'll see you next time.